By the end of the second half of this year, where do you think stocks are? Higher or lower?
They're going to be higher, we think, and we think that they can get up to the high single digits, low double digits. We think that the corporate tax cut is a windfall for companies and for the economy. The big wild card that we're concerned about is this tariff and the possible trade war. That would be a lose-lose proposition. If that goes away, if the dialogue quiets down and we come up with some resolution, we think it's going to be a good market, but do expect volatility.
When you say single digits to low double digits, you're talking about percentage gains? And for what?
Percentage gains, up 9, 10, 11% gains
and that's
for the overall market, for the S&P.
That's the S&P?
For the S&P, and if we're right, obviously small caps are up almost that already. They would drift a little bit higher. But we do think it's going to be a more level playing field between large and small for the balance of the year.
Okay, so that disparity that we've seen between the two might close a little bit. Eric, what do you think? Same question. By the end of this year, where are the major averages? Are they higher or are they lower?
We think they'll be higher, and we think what's behind that is really the backdrop for corporate earnings. We see continued improvement, especially among a lot of the small cap domestic companies. We've had quite a pullback here over the last couple weeks, and we think that really creates opportunities if you really know what you own and you really focus in on individual company fundamentals. For example, we follow hundreds of industrial companies, and of the ones that we follow, about a third of them have seen about 20% declines from their highs earlier this year. So among that group, we think you can go in there right now and do some stock picking and find companies that really do have an opportunity to see meaningful fundamental improvement in earnings.
I want to get some specific names in a second,
the second half of the year.
But do you put an asterisk on everything you just said, just like David was, that if the trade situation does worsen appreciably, that's going to dent your outlook?
No, I think, one key principle that we have is know what you own. And I think that we could find opportunities where companies are going to do well, regardless of what happens with trade tensions, regardless of the shape of the yield curve, that you can go out there and really find some values out there in this market.
David, Bank of America Merrill Lynch says that in a recent week they had the second largest weekly outflow from equities of all time. Does that trouble you? And I note at the same time, though, that the overall portion of people's portfolios, at least according to this Bank of America story, is near an all-time high. I mean, it's not all that. It's 61%. So how risk-averse are investors really?
Well, you have all-time dollar outflows, but the market is also at all-time high levels. But money is flowing out, and people are worried about the trade war. We think if the trade war dialogue is pulled back or quiets down, we really think that the fundamentals are good. Dividends are being increased at a very rapid clip. Companies are buying back a lot of stock, and stocks are only at about 15.5 times earnings. That's very reasonable. And to the other guest comment, there are a lot of very good companies that are at 12 and 13 times earnings. All of those things are bullish. We think if you have a change in sentiment, that money that's going out of the market could very easily flow back. It's not going out because there's structural problems with the market or that there are better places to put money.
David, are we going to look back at these CCAR results and think this was the turning point for the banks in terms of how they have performed so far in 2018, that finally the bull case, all the different factors that people were outlining at the beginning of the year, lighter regulatory touch, higher interest rates, a better economy, CCAR results, all that's finally coming to fruition?
Boy, we hope so. We like the group. We think the valuations are great, and we've had a few false starts where they've done better and then pulled back. This clearly is a positive. J.P. Morgan upping their dividends by 40%. It's back to a 3% yield. Many companies buying back stock, upping their dividends to very competitive rates. This is a good environment for the banking group. Jamie Dimon actually says it's one of the best environments in decades, yet the stocks are selling at very reasonable valuations. Hopefully this is the catalyst, but we do think 6 and 12 months from now, this is a group that's actually going to be a leader and a lot higher.
Eric, you promised some specific names. What are they?
Yeah, one stock that we think has a lot of hidden value is Brunswick. They're going to spin off their fitness business in the first part of next year, which we think will unlock some value. They also have they're in the marine business. They own boats. They also have an outboard Mercury engine, a new design that has come out that we think will allow them to gain market share and continue to see margin expansion regardless of what happens in the macro economy. We also like Eagle Materials, which we see a very strong backdrop for cement demand over the next couple years. We're seeing good pricing power in that business, and we see strong earnings outlook over the next 12 to 18 months. And both of those stocks trade well below the market's multiple right here.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.